Toronto condo market isn't just cooling off, it's completely frozen solid right now. Developers, agents, and mortgage brokers are calling it literally a block of ice, as the numbers back that up pretty well. In Q2 of 2025, only 502 new condo sales were completed across the GTA and Hamilton. That's 91% below the 10-year average and the lowest level in over 30 years. I don't think I can even explain to you how bad this is for the condo market. The pre-construction absorption rates are at just 45% sold, far below the 70% that banks require before they'll finance a new build. That means dozens of planned towers are completely in limbo right now. Developers can't get the financing to start construction because they literally can't sell enough units in advance to start the process. Many of these condos were really never built for end users. And this has been a common thing that you've probably been hearing, where all of these condos that were built over the last 10 years, they were really meant for investors. Majority were targeted at investors. Smaller floor plans, sky high per square footage prices, and often loaded with costly condo fees, okay? Some of these condo fees, guys, are getting ridiculous. Those fees easily can run $100 a month, close to $1,000 a month, and then eventually over $1,000 a month. And if the building's reserve fund is underfunded or maintenance is mismanaged, owners can get hit with a huge special assessment, right? Which is called a special assessment to cover the repairs. With a house, you decide how to do maintenance, right? And this is a big thing I tell people. This is why I tend to point people away from condos. Obviously, if you really want one, I'll help you with it. But if you want my personal advice, I tend to steer people away from condos. These are the reasons why. With a condo, you're completely at the mercy of the board's decisions, okay? Meaning that you can be hit with surprise bills out of nowhere and you can't avoid them because you own part of that condo. Over the last 15 years, investor demand was fueled by rock bottom interest rates, right? Rising prices of these condos, not rental cash flow. People weren't looking at condos and running the numbers of, okay, this is how much rent I'll get, cash flow. These things were never cash flowing pretty much from the beginning. Maybe at the very beginning they were, but these people weren't buying for cash flow. That's why it was a speculation. In some cases, units were selling for $1,400 to $1,600 per square foot, even when rents couldn't even come close to covering these carrying costs. For example, 525 square foot studio bought at $1,400 per square foot, you would need approximately $4,100 a month in rent to just break even. $4,100 a month. A number that's way above what the market will currently pay for a rental right now. From 2015 to 2017, cheap borrowing, foreign investment, and all of the other factors drove a buying frenzy. And then COVID happened, right? A lot of stuff changed with COVID. Rates dropped to zero again, pushing pre-construction demand higher than ever before. And again, investors weren't buying one unit, guys. These were people that were buying multiple units, so confident that they could just flip the paper before occupancy for a profit. These were people that were not planning on moving into it or even renting it out. These are people that were just going to flip the paper on closing to try and make a quick buck. That was pretty much what was happening. But of course, interest rates spiked in 2022 and 23, carrying costs exploded, and rental yields stayed low and resale prices started falling. So pretty much everything that could go wrong happened one after another. So now we got 21 condo projects that have been canceled since early 2024, with more delayed or converted into rental buildings. And even luxury projects aren't even immune to what's happening. There's one specific development at Bloor and Young, once marketed as one of Canada's most prestigious addresses, they went into receivership after $600 million in costs that were overrun and $1.7 billion in debt. Developers are reluctant to slash prices because it would hurt the sales of earlier phases and anger existing buyers, people that already bought into these condos. Some are suing these investors who try to walk away from their contracts rather than discounting the unit. What happens is when someone can't close on a unit due to, let's say, the appraisal value being lower, they can't come up with extra money, the developer or the builder sues the buyer because they're not fulfilling their obligation of the contract. Not just big time investors that are feeling the pain. Some individual buyers, right, that bought pre-construction for retirement, or for their kids' future or to downsize are now looking at losses in the hundreds of thousands of dollars. Now, obviously, rental demand in Toronto remains quite strong, right? Even though rental prices have come down. So some investors are choosing to just hold on, right? They're holding on for dear life, betting on long-term appreciation to continue going up. Again, they're still speculating in their minds. But if unemployment rises or interest rates just continue to stay where they are, many have no choice but to eventually sell. And that could push prices further down. New condo construction has basically completely stalled. The only significant new projects that are breaking ground are purpose-built rentals. That's actually what the developers are preferring to build right now because that's what the market actually wants right now. And many of those are actually failed condo projects that were repurposed for the rental market. Now, experts are saying that the next successful wave of condos to happen, this is what developers will need to do for the future. They need to build larger, better designed units that people can actually live in and that people actually want, right? People can't really live in a 400, 500 square foot unit. They can't really have kids in that. They can't really grow and expand in that. Developers need to target the end users, not the investors that they were before. And they also need to avoid high-cost luxury amenities that drive these condo prices up. And keep in mind, guys, these condo fees do not go down. They only go up as well. It's also a fee that you always have to keep in mind if you're buying a condo for the next 20, 30, 40 years. And so this is not the end of condos. I'm not trying to say it is at all, but it's the end of this buy anything and flip the paper on closing mentality that's dominated Toronto condos for years now. Now, here's my personal thoughts on this. Here's my opinion. People treated condos like casino chips, right? Not homes. It's so clear now. And if you don't agree with that, I don't really know where your head's at. That worked when interest rates were lower or near zero and prices just went up. We are now in a different time, guys. The game has changed. Until developers focus on building homes for people that actually want to live in them and that see themselves living there at prices that make sense, and that's the key here, prices that make sense, these cranes are going to stay idle. They're not building new condos right now, guys. There's been no new starts now. They're just finishing condos that have been, started from years ago. The skyline growth that we're seeing in Toronto is going to slow to a complete crawl unless things change. Let me know what you guys think of that.